All right, guys, thank you once again and welcome to another session. So this time, this backtesting session, we're gonna do it on TradeZella. If you guys don't know, TradeZella is pretty cool. You're able to track all your progress as well as backtest. That's why I like their software, because when you do take backtests, you can actually put trades in. It's almost like a real simulation of the real trading. As you can see down here at the bottom, we have the current balance right here. I don't know if you see it, current balance. So we're gonna start off together with this. So let's go. Right now it's currently in the weekly. I know last time we kind of covered somewhat when you're coming into the weekly and the monthly, how you should go about it. So I already began. I won't start all over from here. Let me move this here. I won't start off from the beginning from there, but just as you can see, I marked out my highs, my lows, the swing highs and swing lows, just so I can get to closer to price action. So that way I'm not focused too much on what's going on back there. So as we could see, we've had breakup structure here, breakup structure here. So we know that we're in a bearish trend. But right here, price wicked and began going bullish. So let's go down to our daily. From our daily, what can we identify? We do have many daily structures to confirm that this is bullish. So we'll start from this angle right here. We got this low, and I'll change the size of the, let's use the, do I want to use a 15-minute one? Let's make it brown. Let's make it brown. I like to play around with the color options, guys, because it helps mentally with knowing what you're looking at. For me, at least, after a while, your mind starts to register when you see those colors. So boom, boom, low. So we know this high right here. This low led to that high. This low led to this high. Broke this structure here. So that would be our change of character from a daily perspective. As you know, if we go lower in time frame, the change of character happened way down here. But from a daily perspective, we're just going to identify this so that on a daily we know this is going that direction. And we also had a breakup structure right here. So this is basic things that you guys are already aware of so far. And if anyone is new, you're not aware yet, just follow along at the end. We can definitely answer those questions if you have. So I'm just marking this out. I'm not going to go through all of them right now. I just want to get to the basics. As I mentioned, this is just a review of what we're already learning from Urimi University. So I don't want to go back as if we're having a whole course because we're not. I'm just reviewing with you guys. Okay, boom. So let's go from here. So we know we have this breakup structure here. We have a breakup structure here, which was this low led to this high, broke this structure, and also broke this structure. We see right here, price swept this liquidity here, but I'm not going to do too much breakdown on the daily, besides the fact that I'm going to make this right here, this zone smaller, because we can see it's smaller than the weekly. We don't have to emphasize the whole weekly zone. So we're going to select this one. As you can see here, price had already mitigated this OB here, so we don't have to worry about there's any liquidity down here to take. This OB here has already been mitigated, so price has already induced it. The only one that's left unmitigated is this here OB plus this little gap imbalance in between it. So we won't emphasize too much on it now because we can see price is still pushing upward. How do we know? From right here, we can mark out our line and we can see that we have a break of structure also here to the top side. All right. So we understand that. So now what does price look like it's trying to do from here? Did we get a break of structure? No, not yet, but it looks like price is heading towards it. So that's interesting for us to see. We have all these internal structures here. The last one that price swept was this one here, as we could see, as a form of a break of structure. So it was a BOS. One thing you guys should always remember, Urimi always emphasize this, anytime price breaks a structure, it has to retrace. It has to. So when you see a break of structure happen, don't immediately assume that simply because it broke the structure, it has to now continue all the way here immediately. That's not how it works. Price needs to come back to pick up liquidity to then have enough momentum to push further, either deeper into the zone or through the zone. All right, so this is our daily. So this is what we've got marked so far from our daily. Just from hindsight perspective, this is how you would want to read it. you know that you came from down here. The overall market, let me go back to weekly. The overall market trend we saw was bearish because we had breakup structure to the bottom. This is the last low that we've reached. This is the last high that we came from. So right now, we know that price is working between this high and this high. You may say, well, what about this high? This high counts too. But one thing I want you guys to remember, the significant high, or if you don't know, this won't just be a remember situation. This will be a for you to know, food for thought. Usually the area that is significant that price would probably react from, it always have somewhat of another OB right before it that it's going to use as an inducement or as a medium inducement as we in the proper terms, as a medium inducement to then
Wait,
fit.
can you repeat that sentence, please?
Yes, of course. So usually when there's a zone that price is going to have a reaction from, such as this zone here, yeah, you will see that it looks like there's a previous zone, such as this one, like, for example, that's right before it, which is usually the retracement zone, right? So they came from this high, led to this low, broke this structure. This low led to this high, which didn't break this high, then led down to this low that broke this structure. So typically you would assume that if price came from this high, led to this low, broke this structure, is headed back towards this zone right up here. Let me mark it so that way I'm not just moving the mouse. Right up here, for example, if you see price is heading back to this zone right up here, the most obvious thing would be, okay, price is going to tip here and then continue back down. Why? Because psychologically, you've known that this high, which led to this low, broke this here structure. That should mean that this is significant, which you're not wrong for thinking that. But understanding that you also in a higher time frame would allow you to understand if you see the reaction doesn't give you all the way till down here, it only comes this low and then comes back up and takes this high out to then mitigate this zone. The reason so is because you have to look at it this way. These highs are so close to each other that price is going to almost use them as liquidity because a lot of buyers entered in these areas. And as you can see here, for example, even though this is a mitigated zone, as you can see, that's why it's very important to pay attention to the details. This right here is mitigated, as we can see. Price came back from breaking this low here. Let me use some more highlighter tools so that way you guys can stay with me. Boom. All right, this high, let's mark out some of our zones. Actually, let me use, yeah. So price left from this high to this low, to this high, to this low, came up here to sweep the liquidity here and push down to this low to break this structure. And then price came up here, down here, and then push back up here to mitigate this zone to give us this move down. Remember, guys, we're still on the higher time frame. We have not gone down to the 15-minute. We have not gone down to the 1 hour, the 4 hour, where your probable POIs will be. This is just to give you an overall idea of the direction that price should be going long term, because you're looking at this from a weekly, a daily perspective. So from this perspective that we're looking at, we see that price mitigated this zone here. Let's see if I have this marked. Perfect. I do have these saved. Let's say this is I don't have the one that says mitigated, but let's just put supply zone. This one has been mitigated. Boom. From this zone, price shot down to break this structure. In a lower time frame, we will find a zone in here, order block in here that price will have a reaction from on a lower time frame. But on the higher time frame, when price starts approaching this, I personally believe, well, we've already been through some of these days, that price will have a reaction through here. But it may not be instantly. But knowing that on a higher time frame, I noticed that price, which after breaking the structure is retracing, that it may want to come back to this overall high. Why is that? From a higher perspective, this was the high that led to this low that broke this structure. This was the high that led to this low that broke this structure. This zone right here has a lot of gap all through here. Look at all of this gap that price has not filled in yet. So I know that price eventually wants to come up here. So I'm not always gonna keep, oh, wrong computer. I'm not always going to think that price is all of a sudden gonna just keep bearish, 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 bearish forever without filling out all these gaps. Even here, for example, from this high to this low, it broke structure. All of these gaps here, that price left needs to be filled. There's a lot of space here because it hasn't come back and mitigated or taken anyone out. All right, so this is just for high time frame perspective. You jump in the market, you're just having a quick look on the daily, weekly. This is kind of what you want to pay attention to just to give yourself a glance. Where are we headed? Where are we going? What was the last thing that's happened? And as you can see, the last thing that's happened, we broke structure to the bottom. We're coming up here to retrace. Okay, boom. Now I'm going to get closer to price action. Let's get right here. Now I'm going to be interacting with you guys. When you see this right here, based on how the candles are approaching this zone, do you think that this here is going to give us a reaction down for a little bit or completely? Talk to me, guys. What do you think?
Um, I think just for a little bit.
You said a little bit?
Yeah.
Okay. Now, the market price is not going to respect this zone or react outside of this zone. Reason so, you always want to look to the left. What is to the left that price could be interested in? Or where is liquidity? Always think liquidity. Liquidity, you should look at liquidity as traffic. Where is the traffic that is there still traffic in anywhere that price needs to drive through? Look at this right here. We have an entire trend line right here. How many taps? 1, 2, 3, 4, 5. Trend line liquidity. So there's no reason for price to stop here when it has all of these sellers who got into the market from here. That's the first part. Secondly, what do we have here? Another unmitigated zone right above it. Remember what I told you about when it comes to price? The zone that's going to respect is always somewhat has one that's before it that makes it look like it's going to react from it, but really is going to go take the one above. What do we have here? We have price that prints an order block here that looks significant. Why is this? Why does it look significant? Because it broke this structure. But this is where you don't want to get fooled. Although we are still on the higher time frame, guys, I'm gonna keep emphasizing this so that way you guys are not thinking where to enter trade. You're not looking for anywhere to enter trades right now. All you're doing is looking to is price going to still want to continue up, or am I approaching a zone that is away from liquidity, such as this right here? So far, we haven't gotten through it yet, but it's away from the liquidity, which is this trend line. It's above it. And if you remember what I told you last time from uh, from the zones where price have an order block and prints momentum candles, if you remember, those momentum candles area will always give you a reaction. Remember that. Guys, if you have some sort of a background, please mute it a little bit, okay? Thank you. All right, so as you can see here, there's liquidity laying right above this zone. Anytime you see a zone like such, and there's liquidity lying above it, it doesn't mean not only just for the high time frame, even on your low time frame, minutes, 5 minutes, 3 minutes, 15 minutes. If there's liquidity lying above the zone like this, beware of that zone because price will make it look like it's going away and push through it to take the liquidity from there. So be careful with that. Now, to answer what you said earlier, this zone will not be respected. Whenever you see price enter a zone with this sort of momentum, this is a full body candle. This is full commitment that is bullish. And then it prints another one this full in it. No, this zone will fail. 100% this zone will fail. And most people who are not aware, they may say, okay, this high led to this low and broke this structure. So therefore, price should respect this high to push it lower. Not at all. Here's the reason why. All of this right here is internal structure. This is just happening internally. When you're looking for the significant high, you always want to look for the significant high. This one here is your significant high. Let me make the brown, bring the brown back. That's your significant high that you're looking for. It's between this high and this low. Did this high lead to this low that broke this structure? No, not at all. Look, it never broke that structure. So therefore, price is signaling to you that I'm not going to go lower. And I've said this to you before, I'll also repeat it. If price, whatever high, okay, let me repeat that. If price came from here, this low leads to this high, it broke this previous structure. It broke the high which it came from. This high leads down to this low. If it didn't break the zone that it came from, when it returns back, it's going to violate it. I'll repeat that again. If price came from a zone in this situation, this low, pushed up to this high, comes back down to mitigate and fails to break this zone which it came from, when it comes back up to the zone that last high, it's going to fail. It's not going to respect it. Why? Because the demand was mitigated. As you know from our invalidation model, you hear me always tell us, if he always explained to us very clear, if your demand is mitigated before your supply will fail. Vice versa. If price mitigates your supply, and for people who are new, supply is the one above. This is considered your supply. This is considered your demand, for example. In this case right here, the demand zone will be here, this one here, but it will be on a lower time frame that we'll be able to see it more clear, because this wick right here that price stopped at, you may say, well, right here, it looks like it's already mitigated. Why did price respect that zone? That's simply because on a lower time frame, there was a unmitigated OB, perhaps on a 4-hour, 2-hour, 1 hour, 15-minute. But as we scale down, we'll see why and where price reached. All right. So let's continue. Now, this zone here, am I expecting a reaction from this zone? Yes, I can see a small reaction from here. Simply because, as we've said, these are the little things you want to pay attention to, like I reminded you guys last time. An area that price prints in order block, an OB in this case, and then has 3 momentum candles or more, back to back to back, you will get a reaction. And I'm going to show you an example where it happened right here. Right here. What did price do? Print an OB. 1, 2, 3. Strong bearish momentums, and it broke the structure. So what happened when it came back up here? It gave you a reaction. You will always get a reaction from those zones versus a zone where price did not print momentum candles. You will not get a reaction there. Price will just violate through it. Okay. So you may wonder in this case, well, how come in this one here, it's not giving that same reaction? Because it has the momentum candles, right? The reaction that you're expecting has already happened internally within this candle here, inside of it on a lower time frame. But on this high time frame, the reason you're not getting this reaction, right above it, you have the original OB that price is interested in. You have this trend line liquidity that price is interested in. You have the fact that price had already tapped in this demand here, so it's not coming up here to react from here. It's coming up here to violate this zone because it already tapped your supply. So now let's go down to a lower time frame. Let's get closer to the action, because eventually we're going to jump into a trade. We haven't even marked our time yet. Also pay attention to that. We're just simply coming into the market. It's 8 o'clock or 8:30. We have about 30 minutes before the market comes into our actual time zone. This is just the thought process that we're having to then get closer to price action to see if we're going to take a trade. Now, cool. We're here now. So we're not going to forget about all of this to the left, but we're just going to stay closer to the price action. Let's see what we've got. We know that we had a trend line liquidity here that price had already taken. Cool. So this right here was all trend line. It was building up, came back down and induced it. As you can see, this whole internal movement that was happening here, that was what we call, or Yeremi called, unintentional movement. Price unintentionally made it look like it was bullish from here and then came back down to sweep everyone out. Boom. Swept them out and then to continue the direction. That's part of the unintentional movement. that we speak on Udemy speaks on. Now let's go to here. Let me mark these highs and lows so that we can keep our zones marked. All right, and I'm only gonna mark the swings highs for now, the swings, not too much of the internal until we get to the lower time frame. Then I'll start marking out the internals. Any questions so far, guys? I don't want to go too fast. All right, so let's continue. So we know we have this unmitigated zone above, right here above this area. We know that this area should fail, so let's mark it as such. I always suggest you to mark your zones as you anticipate, so that way you don't confuse a zone and take a formal trade. I'm expecting this zone to fail, so I mark it. This zone right here, I'm expecting a reaction, not to be respected, but just a reaction because of the momentum that it's printed. But the reason I'm expecting it to fail is why? We have our trend line liquidity right here above it. Price is letting us know this zone right here is just liquidity. Sellers was right here, sellers right here, sellers right here, sellers right here, sellers right here. All of these sellers are still in this trade that went all the way down here. That's too much. They have too much liquidity, too much money in the market. Price has to take them out. All right, so now let's go down to 4 hours. So from the weekly, daily, I like to jump to my 4 hour. I've already marked my zones. I already have an idea of what I'm expecting. Boom. So now in the 4 hour, this is where we're going to mark another structural zones. You want to stay with price action and what's in front of you. Got this high, got this low. We have this low, which we came from. We have this swing high. We have another low here. We have this swing high. We have this low here. And yeah, we can mark this. On a lower time frame, we have way more zones, but we're just gonna mark these from the 4 hour. Cool. What do we have here? Excuse me. What do we have here? We see that price broke structure to the bottom here and still came up and pushed. Okay, why didn't price come back, mitigate here, and push back further? It's very clear. We already know that we're expecting this zone to fail. We know that there's more liquidity above this area here. So we can't expect price to just all of a sudden start being bearish because we already know overall the zone that price came from, and I'm jumping back to the weekly just to show you this. Overall, the zone that price came from up here, or even if we choose to say up here, for example, let me duplicate this. Even if we were to say it was this high, right? Because this was the second high, the lower high. Even if it was to say this high, price came down to this low, broke this structure, we can't expect it to just stop here. This would be like somewhat of a decisional. This zone right here. This would be like a decisional, and this would be considered your extreme. But we also see there's liquidity above the extreme, so we have to be wary of that. All right, and we have this long news candle from back here that hasn't been fully mitigated. So we can consider that price could also come deeper to mitigate some of this liquidity. Because if we mark this, for example, as the order block that it is, if you really want to get detailed, you can mark this order block as it is, and you can see. That's a huge zone which price still can come and mitigate. You see, you have the bearish engulfing right here. You have the engulfing candle. You have it and price mitigated here. It hasn't mitigated 50% of it. If you take a look, 50% of that zone is about right here. Price hasn't even taken 50% of it. So you keep this type of information in mind so that when price approaches these zones, you're not just taking entries at the top of the order block. You want to wait for your confirmation. You want to wait and see that change of character, break of structure happen. Why? Because if it changes character but doesn't break structure, you know that you could get faked out and price continues deeper into the zone because it can. It has so much more liquidity to take from that area. All right. So let's go back to our 4 hour. Boom. So we'll keep this overall ping zone above marked so that way you know that price can go deeper into that zone. All right, so we're in the 4 hour. We know that price, the last thing it did right here was break this structure here. We already know that we're in a bullish market internally. Externally on a high time frame, mouse moving so slow. All right, externally on a high time frame, we know that we are bearish, but internally we know that we're on a retracement to go back to the zone which we came from to mitigate before we continue down further. Cool. So now we have this breakup structure that happened. If anything, we're expecting price to come back somewhere here. I'll say we were expecting price to come somewhere here as our demand to tap us and push up further, right? We're already expecting this zone right here to fail. We know this zone right here can give us a reaction. So if price come tap here first and then comes a reaction, it may violate this zone. But it is the 4 hour. Another another detail I want to make clear. On a daily, weekly, and 4 hours, the invalidation model does not apply. Okay. The invalidation model, which means if price mitigates your supply before the demand, it's going to violate it. That doesn't apply for the 4 hour and above. Remember that. It don't apply for the 4 hour and above. Price can come tap here, come down here, tap here, come back up here, tap here, and come back, tap here. It can do that on those higher time frame. It has enough because there's so much on a lower time frame liquidity that's being taken that price can have those types of reaction. But this zone right here, which I marked, this one, for example, I'm gonna put it as a demand. It's just a hypothetical zone that I'm saying price can come back to. Not saying that it will, but the reason I mark it is because we've broken this structure. This low is led to this high that's broken this structure. As we know, a retracement must happen. The retracement can be to this zone, or it can be to any of these lower zone. Like for example, right here, this hasn't been mitigated. This zone right here, let's see, for example, mind you, we are still on the 4 hour. This one right here doesn't look like it's been mitigated either. This is how detailed you want to be. You're like a surgeon. You're looking for any little ways that price can potentially finesse you into getting into the wrong zone. All right. And this right here is also not taken. So this could be your decisional. This could be your extreme as far as the demand goes. But you're just keeping this in mind. You marked it out just so you know that price can come to that zone. But we're not even at our trading hour yet. All of this information is just probabilities of what you know price can do. But by the time you enter a trade at a 1 minute, 5 minute, or 3 minute, 2 minute, you're not taking that trade all the way down to these zones. These movements from perhaps, for example, up here to here, that's going to take days. But the fact that you know that once price taps here, the direction that it will want to go is to come to this zone, that lets you know, okay, when I take this sell on this 1 minute or 2 minute or 5 minute, I'm taking it down to this direction. But when I exit this trade at the end of the day, maybe if it's halfway this way, the next day when I come back into the market, I already know on my overall analysis what I'm looking for, which is sells, because I remember that price broke this structure and it's on its way down to here. Until it gets here and give me a confirmation that it wants to go deeper to here, this is where I'm expecting to come park at. All right. So let's continue. We got a 4 hour demand. We somewhat have a supply, but it's not a 4 hour supply. We'd have to go to the left to find it. But for now, we're not going to. Hold on. Okay. Boom. So let's go now to 1 hour. Let's get more price action. We're at the 1 hour. All right. So from the 1 hour, we don't see too much of any zone here, but the only thing we see is a trend line liquidity. So we're going to mark it. Always mark what you see. It's easier for you to take a trade or not take a trade when you mark what you see because you know, see what I just did? I deleted that zone. Why did I delete that zone? It's lying inside of liquidity. You never want to take a trade. I repeat, you never want to take a trade at an OB or a zone that's in liquidity. You will be taken out with that zone. So you never want to take a trade from that. So I know if price come back this way, it's not going to be to stop here. It might give a fake out, but it's going to continue to go lower. So I moved that zone out. Cool. Let's keep watching. So now I'm on a 1 hour. Let me go down to, let's see. Okay, we have some consolidation here, but it's still a 1 hour zone, so it's a lot more to see. We have all these internal structures here. So much movement within these zones that we're gonna catch trades from. But for now, let's go down to 15 minutes so we can see the market more clear. Because at this point, we already have our overall analysis. We know that overall price was on his way down on a weekly, decided to turn around. It's been going bullish on a weekly, and it hasn't reached the high that it needs to yet in order for it to start coming back down to break that overall weekly structure. So mentally, we're biased for buys within this internal movement. Our bias is buys. So let's go to, let me see if I can add sessions into this. Let's get sessions. Cool. And sessions will help us with getting those, boom, get us help us with getting those zones in there. So remember earlier when I asked you about this overall zone and I was saying, hey, do you think price is going to violate this zone or respect it? And you said, oh, I think it's going to give a reaction. And I told you that reaction which you're speaking of is going to be internally on a lower time frame. These are the reaction that you see. It came in here, it reacted down here. It came back up, it reacted down a little bit. It's pushing up here and it's going to retrace a little bit. So these are the reaction you're going to get, but this zone overall will not be respected simply because of the momentum that price approached it with. It gave you a clear signal. Now we've reached here. First thing we're going to do now, once we've reached our, whether it's 1 hour or 15 minute, preferably I like to write it on a 15, is look for our entry time. This is actually wrong. Actually, yes, New York is correct. We're gonna look for our entry time. Actually, I like to do it on the 5. Look for the 9 o'clock. Let's find. Mind you, I'm trading in the US. So New York session for me starts at 9 a.m. So for you, whether you're trading London or um whether you're trading London session or New York session. I prefer New York as of late. I've been trading New York session mostly because I've found a lot more advantage in trading New York than I have with London. Because with New York, I can read the narrative better because the story has already been written from Asia to Frankfurt to London. I mean to London and then following New York, knowing that New York is only going to do one of two things, continue or reverse. So it's a lot easier to pick one of the two narratives versus having to try to guess the game with London, etc. Because you really have to understand the unintentional movement, liquidity sweep, followed by the expansion for you to keep it. And it's not hard. It's just for me in the past month, I've just been testing the New York session and I've had way more and better results than when I did the London session 2 months ago and only traded London. I was waking up at 3 a.m. to trade London. It just was not as productive for me and I was losing a lot of sleep. All right, so let's get closer to it. We're getting closer to where we probably would take trades, guys. All right, so now this is the part where you guys see in the mornings when I make those posts and stuff, I just really get into that markings, etc. This is where I'm approaching the time zone. The market is currently right here. It is at 8:15 in the morning. And what am I looking at? I see London, I see Asia printed right here. Okay, I see all of this liquidity here. I see trendline liquidity here. All this trendline liquidity, I could see all of this. Okay, does that mean price is just all of a sudden going to come take all of this out? It's possible, but I know that I also see this breakup structure here because these are all internal structures. We have a breakup structure here. Remember, that's why I say always mark what you see because it aids and makes it easier for you to see what's happening. And what did we say? Anytime we have a breakup structure, price must retrace. Now we have, let's see from this area here. What do we have? Let's mark out some zones. We'll start from here. Always try to stay close to price action. We got this high that led to this low, which led to this high, broke this structure. We have this low that led to this high. Actually, we could use this one, for example, broke this structure. Oh, broke this structure. Then we have this low that led to this high that broke this internal structure. And we have this low that led to our overall high up here where I've just marked that breakup structure. that also broke this structure. So price has been confirming bullish, 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 bullish this whole time. And what do we have here? Always mark what you see. We had an unmitigated OB here that wasn't tapped all the way until here. Price came back down and mitigated it. Okay, it was tapped. We have one tap, two tap, three tap, four tap, five taps, almost six tap. That lets us know this was a strong area that is now going to become liquidity. So what else am I looking for? Okay, I believe I see another OB here. Always mark what you see. This zone right here is not yet mitigated. And we are on a 15-minute, guys. So it's 15-minute, these are zones that price respect. So we mark it all the way here. Now that we're closer to price action, we can anticipate where if we take a trade, we will end up getting out of. This is where you can say, all right, this is a demand zone that I would potentially take a sell down to. Or if I was to be tapped there, I would take a buy up to. This is just hypothetically speaking, because why? We have liquidity here that needs to be taken because price is mitigated so many times. By the time it comes back, it's going to violate it. Because retail traders are going to see this as what? Support and resistance. They're going to see it as this is a zone that price will respect because it's been respecting it. So when price comes back, it will not respect it. Why? Because look, it showed us right here. It left the trend line liquidity. It left this trend line right here beneath. So when price comes take this trend line, it's going to take this along with it. All right. So that we already have clarity on. We also see that there's an unmitigated zone here, plus somewhat of a gap imbalance above it. Good. That's good to know. Underneath it, we don't see anything else. No unmitigated zone. This one got mitigated. This one's got mitigated here. This got mitigated. This got mitigated. So we can understand at least from this low that led to this high that broke this structure. All of the order blocks within here has already been fulfilled. This one that led to this high that broke this structure, this zone hasn't been fulfilled. Actually, we're going to make it all the way to the bottom of the zone. This one hasn't been fulfilled. This low that led to this side that broke this structure, it's been mitigated slightly. So we understand now that we're here. Any questions so far, guys? Okay, let's continue. High, low. The reason I mark this as a low for now is because price can still continue further. Doesn't mean that it's the actual low. So I'm not even going to confuse you like that. Let me remove it. Um, like I told you guys last week, how do we mark highs and lows? Confirm that it's an actual structure. You want to see those three momentum candles. Right here, do we have that? We have one, two, three. Okay, we could say this is a high and this is a low. We can say that because we have the three momentum. What about here? We have a bullish momentum, then we have one, two bearish momentum. This is not a high or a low. This right here, that's not a high or a low. Don't fall for that, because if you fall for it, you think price is going to respect some zone like this, you will be part of the liquidity. So it's not. But what do we see from there, though? That's very important. It's a trend line. Look right there, right in your face. Price is giving you signals. Price is giving you all sorts of signs that I'm going to be coming back lower. All right. Now, this is just 15-minute. Another thing that I like to mark out, I always tell you guys, is consolidation zones. Look at all of this. This is a consolidation zone. Price broke above. And now we also mention if you see price break above or below, whichever direction it breaks first, it has to come down the other way. And I never
Sorry
got,
to interrupt.
go ahead, Aisha.
Sorry, do you know the part you said this is not a high or low? Don't get which is that? Is it that low?
This one right here, this area here.
I would mark that as a low, a high. Why is it not? Can you tell
On a
me?
lower time frame, it would be. When I say lower time frame, I'm referring to like a 5-minute zone. Let me see if I go to the 5-minute, you may see it looks like a higher low. See? Where is it? Boom. From a 5-minute, you may say this is a high, this is a low on a 5-minute. But the
Yeah.
actuality from where we're marking it from, which is right now 15-minute, it isn't. I don't know if you was on the last call when I explained to you guys to identify a significant high and a significant low, you want to see the three bearish candles or bullish candles be printed to confirm that high or low. So in this case, for example, the reason we mark this one and this one as a high and low is because you can see, zoom in a little bit, you can see the three bearish candles. One, two, three. You see these three bearish
Okay.
candles? That will confirm
Yeah.
your high and low. Excuse me, guys. 1 second. Hey, let me call you right back. I'm on a Zoom call. All right. You can see the three bearish candles here. 1, 2, 3. That's perfect. That's how you identify the high or a low. For example, here, remember what I just said earlier when I had first marked this, when I first put the dot here, I put my highlighter tool here, and I said, you know what, let me delete it so I don't confuse you guys. You know why I deleted it? Because price haven't finished printing. And the only thing I have here is 1, 2 bullish candle. I can't automatically assume that this is the low because if price decides to print bearish all the way here and then do bullish up here, then this will become the actual low. Not,
Okay, understood.
you know what I mean?
Yeah. Yeah.
Okay.
Thank you.
Yeah. Let's go back now. So far we haven't pressed play yet in the market. But just from what we're seeing, we know that price in Asia, well, not Asia, but previous days, because these are Thursday, for example, but this is currently Monday. So we're looking for this right here is all from the week before. So we see that we had a consolidation zone that previous week, and we see that price pushed up and not down yet through this zone. So we understand there's a probability that we may come down through it. We have this trend line. We have this liquidity of the retail support and resistance. How do we know? Because look how many times it's tapped. That's confirmation for retail. We don't trade retail, but it's good to know what zones and areas that retail are expecting to enter trades from, because those are 9 out of 10 times where price will take out those people and you can stay in the trade or you can avoid entering trade from those areas. Like here, I would not enter a trade from this zone because it's been tapped too many times. All right. So let's go ahead and get back to the price action. This is still 15 minutes. We haven't really gotten to the butter of the market yet to be able to enter trades. 15 minutes we can use to identify zones, but as we can see here, we're close to our overall high time frame. So that doesn't mean that price is immediately going to come down to these areas. Perhaps price can use this mitigation of this overall high time frame to then push down. And then you may think in your head, well, what is this zone? Remember, if we go to our daily again, when we mark this zone, this was this overall high up here. Actually, it was better on a weekly to see. It was this overall high up here that I said that price would just give us a reaction from here because it had printed 1, 2, 3 bearish candles. So we should expect a reaction from it, but not respected to bring price all the way down here, simply because of these liquidity that's above it, as well as this order block that's above it, as well as this overall weekly zone that's above it, and this high that hasn't been swept. So there's so much liquidity above that you can't expect price to just all of a sudden come back and take all the way back to here yet. It still wants to come up here. But knowing that this zone is able to give us a reaction, that is confluence. That's enough information to tell you how you can expect this trend line to be taken, this imbalance to, I mean, this consolidation to be filled out, this trend line to also be taken, this retail support and resistance to be taken. Price needs to hit a pocket that has enough money to push it down, or in better terms, it needs to reach a zone to take enough liquidity to come down and sweep all of this. It's not just going to turn around and do it. But that's just hypothetically speaking. Let's see what happened. So we go down to now the 5 minute, because we already know we're playing between this high and this low, which is where price last came from. All right, so we're going to stretch out the market. From the 5 minute, we have internal structures as well. We have this internal. Let me see if it changes. 5 minute. Okay, 5 minute is green. Okay, so we know 5 minutes green and the 15 minute I think is brown. Let me confirm it. Okay, the 15 minutes is orange. That way we don't get lost in understanding these zones. I highly suggest you color coordinate your zones because it just makes your life easier. All right, so on the 15 minute, we knew that this wasn't a low, right? Remember we said it, this is not a low because it only printed 2 bullish candle on the 15 minute. But on the 5 minute, it's definitely a low, right? Look, 1, 2, 3, 4. All these bullish was printed. So we'll go ahead and mark it as a low for 5 minutes. Because we know that price respects 5-minute structures and 15-minute structures and above. 1 minute's not the same, but 5 minutes we can expect structures to be respected for that reason. So from here, we know price did. We're going to continue to mark what we see. This is before we even press play in the market. You want to practice a lot with back testing because how you take your normal trades on a daily basis is how you will typically back test. Back testing is nothing different than forward testing. The only difference is you get to pause the market. So you want to pause and get to this sort of I call it like a 1 minute drill, etc. But you want to get to pausing right before you enter your area and do all of this breakdown and do all of this investigation into the market. So that way, when you do practice this over and over and over, you keep practicing this closer to market investigation, you know where your zones are, you're expecting to have reactions. It's easier for you when you come into the live market for your brain to see it faster. So that way you don't feel like the market is moving too fast. All right, so let's do this right here. Boom. We know we have a 5-minute break of structure here. All right, we're going to mark everything we see. We know we have another break of structure here. Everything we see. And what has happened? Ask yourself this. What has happened? Every time price broke structure, it retraced. Broke another structure, another retrace. Mark some more structure that's getting broken. These are all important zones to signify. This is not a low. This is a high. On a 5-minute, this is a low on a 5-minute. Remember, this was the low that we talked about on a 15-minute. You say you would mark it as a high and low. And I said, yes, but on a 5-minute or lower time frame, it will be. But on a 15, it isn't. So on a 5-minute, we have it as a low. So we marked it. But when we was looking at it from the 15, we didn't mark it. We didn't want to confuse ourselves. But when we see it on a 5-minute, we can then mark it. Excuse me. Let's remark this. So we have another breakup structure here. But when you see these types of breakup structures happening, and there's a whole trend line right here, all price is doing is juggling liquidity, faking so you could, everyone who's thinking, oh, this is breakup structure, price is so bullish that it's gonna just keep going all the way straight up here. It is not. It is building you up to think that because look how close these breaks of structures are. Another nugget. Anytime you see perfect breakup structures and retracements like this, beware that price is going to take all of that zone out as liquidity. All of this zone will be taken out as liquidity, this whole area. This is just liquidity being built up. So when you see these types of price action, be mindful. You don't want to just FOMO into a trade. You want to make sure it's a clear zone. Now, one thing we know for sure, as smart money traders, SMC traders, we know that if price is going to take a zone, it has to sweep liquidity first before it gives us that reaction. So we could say, okay, what do we see here? We're about to open up for New York session. We're about to open up. We have an unmitigated zone here. We have a trend line right above it. So we're thinking price could potentially take this trend line, tap here, and continue up. That's somewhat valid, but why would this zone not be also valid? Let's take a look. All right, so well, we have a consolidation right here. That's interesting. So look at the manipulation that price is creating. That's why it's so important that you don't just FOMO into trade. You want to look at all of these and cross out zones you're not going to take trades from. Well, what signifies this zone to be valid? Just because it's a order block, you may think? No, just because the order block doesn't make it valid. Because this right here was a low on a 5-minute, correct? We're still on 5-minute. Yeah, we're on a 5-minute. Yes, this was a high right here that led to this low right here. And excuse me for not marking the right colors. Let's move this out the way. Okay, so that was a low as we see. Mind you, we didn't even get to the 1 minute, so we can get to the right trades yet. This is just all of the thought process that you want to practice doing on back testing, because when you're in a live market, trust me, your mind will move a lot faster, a lot faster. Right now, it's just new, it's fresh. So it seems like you're doing so much before the market even gets there. But that's why you get to the market 30 minutes, an hour early. So you can do your homework before the markets get there. You're not entering trades or FOMOing into the wrong area. So I already know why this won't this area won't hold. Maybe my market might react, but it won't be the significant zone to enter from. Because look, this high, I mean this low led to this high, for example, and broke this structure. But where was the order block that where was the OB that it broke the structure at? Look at the OB. It's literally at the line where the big BOS happened at. Those are not going to be OBs price is going to respect at all. It's not. So you don't want to look at this and expect this to be a zone for price to react. Maybe if this was a London session and this was the opening of Asia and Frankfurt finished sweeping the bottom of Asia and then London taps right here to push up to go sweep the highs of Asia and Frankfurt or the unintentional movement, then you can say, yes, price can give you a reaction from something like this to come sweep because you know it's going to come back down after that. That's in those cases. But this is not Asia session. This is a London session. So now you see one consolidation zone, two consolidation zone. So all of this will be liquidity, another trend line. All of this we know. So now we go back to the 1 minute. We go down to the 1 minute. Let's see what else is price printing. Now we can see the sessions for what they are. We're still, mind you, we're still inside of this weekly zone that I asked you from the beginning. You guys remember the early weekly zone where I say, do you think price is going to violate or respect this zone? All of this that we've been reading, guys, is happening in this overall zone. So from that high time frame we were looking at it, that weekly, remember what I said, you're just using that just so you can have an idea of what's going on. You see what I'm saying? It's still going to violate it, but you're seeing why price is doing all of this back and forth. You can see that it's not trying to come back further. It's just pulling back and forth to trick early sellers, early buyers, FOMO people into thinking they're missing something. But if you're a swing trader, you're already holding on till past that. But we're not. We're intraday traders. All right, cool. So one thing for sure, we're going to go to the 1 minute. Let's identify 1 minute structural zones. I don't want you guys to ever be afraid of the 1 minute time frame. The reason you're not going to be afraid of the 1 minute time frame is because you've done your homework early. So now you understand that this 15 minutes high led to this 15-minute low. Or was this supposed to be a 5 minute? Let me confirm. I think it's supposed to be a 5. Yeah, it's a 5 minute. Because it hasn't printed a 15-minute yet. Let me make sure you understand why. I'm going to go back so you can understand why. This 15-minute high is down here, but the reason we haven't marked this as the actual low, I repeat, is because it has only printed 1, 2 momentum candle to the opposite direction, not 3. On the third one, you could then say, all right, this is a low. But because it hasn't and it started turning around, it could easily just do this, come back down and print it down here, and then started going up. And that will be your actual low to that side. So knowing that, we're only going to mark the 5 minute, remembering that this is a 5 minute. So this 15-minute high led to this 5 minute low. You may think, well, I guess we're going bearish from now. Well, what says that? Because this overall zone here, this 15-minute zone here didn't get swept. So you can't assume that we're all of a sudden bearish just because price, what, changed this character? Did a 5 minute chalk? That doesn't mean it's coming all the way down now. It just did a 5 minute chalk, perhaps, to come take these liquidity, this unintentional movement. But until you see price break now this structure, you mark this. When you see stuff like this, you then want to mark your line out. Okay, this is the potential break of structure that you want to wait for. When price then comes break this structure, now you can say, I'm in a zone to take a trade. Until that happens, you're not in an entry zone yet. So what happens? What else do we see? After price chalk, it came down here on a 5 minute. It brought up here, created another 5 minute high. The reason this is considered a 5 minute high because we have 1, 2, one momentum, three, four. So it's printed enough bearish candles in that direction to confirm that this is a high. All right. Now, boom. What do we have here? Right above it on a 5-minute, an unmitigated 5-minute zone right here. Okay, so now we're closer to price action. Now we've got a supply, right? We've got us a supply zone that if price decides to come back, we can enter for a sell. A sell from this high, not to this zone because we know this is gonna fail, but to overall let's see, where's the next zone? It's probably gonna be, yeah, a lot lower, probably to these areas. But we're intraday traders, so we're only gonna take it to the end of the session. But when we get to the 1 minute, we would find our exit. Your entry is just as important as your exit. You want to know where you're gonna exit the trade. But for now, we know that this is a supply, so we're gonna press play in the market. This whole time you see I've done all this breakdown, we haven't even pressed any play. We just went from this high time frame all the way down to this 5-minute to now see what is happening in front of us. We didn't change any concept. The same change of character, break of structure, like zones that we're marking, trend lines that we were marking on a high time frame. When you get down to the 5 minutes, 15 minutes, etc., you're doing the exact same thing. The only difference is you're doing it on a smaller scale with tighter candles. Okay, so we know this is liquidity. This hasn't been taken out yet. This would also be considered a break of structure, but I'm sorry, that would be a change of character for like a 15-minute, for example. If you go to the 15-minute, this would be the first area of a change of character for the 15-minute, for example, because this was the 15-minute low that led to this 15-minute high that broke this structure. So price would have to do this break here for you to say, oh, on a 15-minute time frame, this is a change of character. Now this is for people who likes to trade on the high time frame only, meaning they like to get their entries from the 15-minute. They like to mark their OBs from the 15-minute or wait for their confirmation in the 15-minute because those are zones that are clear confirmations. If price breaks a structure on a 15-minute, that's confirmation that it's going in that direction. Just like if it does it on a 1 minute, on a 1 hour or 4 hour. Those are high time frame confirmations. But what you're getting from me and the way that I trade and the way that I've been able to see the market is on a 1 minute level to where you can get into the 1 minute and take trades on a daily basis. You will find trades every single day. Now, some trades will be a little bit more advanced than others, and some will be as simple as just what I'm showing you here. But this is where you come into understanding of, okay, this one is a little bit more advanced. I don't quite see if I should enter it, and I don't type of thing. But let's continue. So now we're back to the 1 minute, guys. So let's go to a 1 minute structural breakdown. Same thing we did on the 5-minute for the internal 5-minute structures. We're now going to do for the 1 minute. So we have this 15-minute high led to this 1 minute low. This 1 minute low led to this 1 minute high. This 1 minute high led to this 1 minute low. This 1 minute low led to this 1 minute lower high. And always remember the reason why we consider these areas as the highs and lows. Oh, this mouse is gonna drive me crazy. The reason we consider these as highs and lows is because of those momentum candles that I told you about. Okay, we can say this right here is a high and low. It's a very tight one. Look how market did it. It created it very tight. This low and this little high here is very tight, right? We have 1, 2, 3 momentum candles internally. And why does it have somewhat of significance? It changed character here. This was your change of character. This was your internal change of character. This was your internal break of structure. Then price, you don't really see any more 3 bearish momentums anymore until further down here. Just kept doing a lot of up and down. Right here, then you get another BOS. And it reached all the way to this 5-minute zone. And it gave you this next 5-minute high. That did what? Gave you a change of character once again to this side. Now you got this change of character to the high side. All right, cool. One may say, well, what about here? This was a high, this was a low. Yes, it was. This was a high, this was a low. Yes, it was. And this was a high, and this was a low. Yes, indeed, it was. But the reason why we're not attacking this, because obviously it happened way before the market, but we're gonna market. We're still marking it. It's important to market because overall, here's another one. This high led to this low, and this low led to this high. Three momentum candle. One, two, three. This was a three momentum candle. You can still mark the high above the bearish candle because that wick was the bullish at the beginning. It was originally a bullish when it started. That would have been the fourth bullish, and then the bearish pressure came in, and price ended up closing right above here. But this still counts because you have your three momentum candles before this bearish pressure came in, so you can still confirm that as a high and low. Now, what did price do to these? Price ended up sweeping this. This was like that was your first sign of change of character here. This right here, this was your first change of character. This was your breakup structure on the 1 minute. This was your BOS. This was your chalk. Cool. Change of character, breakup structure, another breakup structure, all the way leading up to this 5-minute high. Boom. Now, we don't have any internal 5-minute highs here. I'll go back to the 5-minute for you to see. We don't have any 5-minute highs that was built here on a 5-minute. The last 5-minute zone was here, and the next one was up here. So knowing that we didn't have any of it here, we can't expect price to all of a sudden give us the confirmation we're looking for. Another thing here we could see is price give us another trend line. Right here, we have another trend line. So let's go back to the 1 minute. So these are things you want to pay attention to. Another trend line to what? There's an order block here, for example, that price can come to. We have 1, 2, 3 bearish pressure. Remember I told you, certain zones, when price makes this momentum move, you'll get this reaction from it. It may not respect it, but you can get a reaction. But just overall, looking in this 1 minute area, guys, I'm just going to zoom it out so you can see. Look how much liquidity is around just this area. You've got this big old trend line underneath you. You've got another trend line above you. You have an unmitigated supply here. And price has changed character, broke structure to come back up here after it's already changed character and broke a 5-minute zone. This break of this 5-minute zone has more significance than this break and change of character of this 1-minute zone. So we can expect price to mitigate here if it decides to come here to sell down. But let's continue to watch. Now we can press play, right? We're gonna play the market slow because it hasn't reached our time yet. All of this is before our time. So these liquidity areas, the breakup structure can happen before it even reached 9 o'clock. That's going to confirm this for us. But we're just created the hypothetical situation that can happen once we get to 9 o'clock. So we're going to press play. So the market is going. It's not our time yet. We're just watching. We've already did our homework. We're trying to see what happened. We had another change of character in here, another breakup structure here, another breakup structure here. Okay, boom. So before our time frame, price decided not, let's pause it here. It's not even our time frame yet. You see right here, New York session. This is where we're supposed to enter. As we could see, we chalked here, back down again. Price chalked to the bottom. Price did the same thing here. It BOS this. It did it again. It BOS here with a full body. What confirms the breakup structure, as we know, is a full body close, not just the wick, the full body. And what did it do? It tapped into this here demand. And remember, the only time the invalidation model does not count is on a higher time frame, 4 hours and up. So right here, the fact that it tapped into this demand could be a sign that this zone might be in trouble. Why? Our overall analysis from the weekly, daily, 4 hours is that we knew that this overall pink zone is not supposed to be respected anyways. We know that this pink zone is supposed to fail. So if price came and tapped here first, knowing our invalidation model, we should be wary of this zone now. Unless price decides to come back and push through it. What will confirm it before 9 o'clock is this internal structure here. You have these high, this 5-minute high led to this 1-minute low. This 1-minute low led to this 1-minute high, which led to this 1-minute low that mitigated. So if price comes back and decides to sweep this 1 minute zone right here, then yeah, it confirms it for you. This guy right here is gonna get destroyed, this supply, because they respected this demand. So we're gonna keep pressing play. Why? Because it is still not our time yet. It's not even our time to enter no trade, but we're still watching, seeing, okay, let's see what ends up happening. Is it going to take that high that it came from? And remember what I told you? If it comes from a high, let me see if I can pause. Remember what I said? If price comes from, I'm trying to use my hand, I forgot. If price comes from an area this high, rewind. This was the low that led to this high that broke these internal structures. Price then decides to come back to this zone, and it did not break this highs. Well, this high did not break any of these overall highs because this was the overall 15-minute zone that led to here. So if this is supposed to be a retracement, it has to come to here or break this if it wants to continue, because it also didn't break this here. Price gave us that confirmation. This was never broken. This broke the structure of this overall 15-minute. Let me scrunch it a little bit. 15-minute low led to this 15-minute high, broke this structure and this structure. Created this internal structure, I should say, and it can also break that internal structure. So we know that this leg, right here is what you would call like a main push. That's where everything began from. This right here is simply the retracement to come mitigate or take out liquidity for prices to supposedly come and continue this way. That's what we're supposed to be expecting to see. But only thing that can change that, let me go back to, is if price decides to come break this low here, because this was the low that made that whole push. If price break this low, then you can expect that bearish movement. But it didn't when it came down here and caused that 5-minute low. It didn't break that 15-minute structure. And when it pushed up to create this 5-minute high, it also didn't break this 15-minute high. So now you know everything that's happening right now is just internal structure between these two. You're basically playing between those two zones. That's all. So you're looking for either a buy from up there, a buy from below to push past up there, or a sell from up there to push below there. You're not looking for anything else. This is how you simplify your areas. You don't want to be sitting there thinking too much about what has happened on a daily, weekly. Those are just information that you keep in the back of your mind to understand why this supply, for example, will fail, because you know that the invalidation model told you if price taps demand before supply, supply will fail, which then aids your understanding that this overall pink zone should not even be respected. It will be violated, as well as because you know that right above it is that 1 hour zone that we had marked. It might not be showing right now, but because it's the way I marked it, but this overall zone here, you know that this is the overall zone we're expecting to tap to then perhaps begin the bearish movement, because that was the one that was away from liquidity, the trend line was above it, etc. So let's go back to that 1 minute. Boom, let's get close to our time zone now. Now let's actually get into 9 o'clock and see what happens. Boom, 9 o'clock comes. What did I tell you? If price breaks this high, not breaks this high. Yes, if price breaks this high, that confirms that this guy here is in trouble. Yes, that's true. But remember what I said. If price comes from a zone and comes back to it and does not break the previous where it came from, the zone where it came from is going to get violated. It started from here, this low, led to this high, broke these internal structures. This high came back to this low. It did not break or induce it. It came and respected it. So that lets you know when it comes back this way, everything right here is going to fail, including this. All right. So now we know that this is supposed to fail. So we're going to switch this from being a supply to a failed OB. We're going to say this should be a failed OB. So from here, let's go ahead and play price action. Let me call you back. I'm going to Zoom call. All right. So let's press play from here. Price is coming in. It's 9 o'clock. Boom, boom, boom. 9 o'clock is reaching. It's like 9 or something, but let's pause it for a second. Now that we're into our time frame, I see that price has swept somewhat of this trend line liquidity right here. This has been swept. So I'm gonna mark that. That price swept this zone. Boom. What is down here that can let me know that price can come down and tap something here? Now I'm looking for buys. At this point, price has changed character here that is going back upwards. It took this 5 minute zone as well. I'm not going to mark it, but just so you can see, it took this 5 minute zone because I don't want too many lines on the screen. It took that 5 minute zone. So now I'm looking at one of two things. Yes, this is a trend line. Yes, this is a risky area. But what would consolidate me taking a trade from here or buy, for example, is simply if price continues to come up here, fail to tap this, comes back and mitigate here, and I could take it up. But here's what I'm watching, paying attention. Let me make it a little slower so that way it doesn't get too far. Boom, boom, boom. Still structurals, guys. You want to still keep marking your structures. We had a 1 minute. This is a 1 minute, 1 minute. I do like to go back also to 5 minutes so I can kind of get a better clarity. So as we know is, okay, boom, 5 minute low, 5 minute high. This was a 5 minute low as well that mitigated this OB. So I can make this 5 minute and let's see the 15 minute. Did any of these stand as a 15 minute structure? So what did price do on the 15 minute? High, boom, okay, didn't quite create a high from here, but it came back down and didn't start pushing up. So at this point, we can say this is now a 15 minute structure zone. And I'll tell you why. Now we can mark this as a 15 minute because price has done enough, has printed enough candles in both directions to let you know that this right here was significant because it came back and mitigated this area and it's pushing back up. Now look at the size of this 15 minute candle. If I'm coming into a 9 o'clock zone, I mean, into a 9 o'clock session, and I see this big candle is printed like this, I'm looking for nothing but buys. This is so much confirmation that price wants to go up, nothing but buys for this move, not for the whole day, just for this move. So I'll go back to my 5 minute. I know that I had a 5 minute break of structure here. This is why it's important that you always mark what you see. I have a 5 minute break of structure. Underneath that 5 minute was just a 1 minute change of character. So change of character, break of structure. There goes my two confirmations right here. That this is a buy. Okay, so now what am I looking for? I'll go down to 4 minute. Now I'm just looking for a clean sell area, a clean sell zone. I could mark this right here as a zone simply because it's bear, bullish, bullish, and all, and that's one bearish candle. So this right here could be that, but I want to get a cleaner one. 3 minute. Okay, we got a clean one right here on a 3 minute. Boom, boom, and move this to the right. Boom. So now I want to see price come up here. Don't tap this. Come down here. Tap me in here so we can push through this together. Let me go down 2 minute. Anything clearer? Okay, 2 minutes, somewhat the same. Looks like about the same as the 3 minute. Just a little bit of adjustment can be made for like a lower area like this, for example, but it's not that that huge of a difference. So I'm gonna leave it. Let's go to 1 minute. All right, 1 minute, similar. I could just bring it down to just this zone right here and take it, but it's not a difference of too much pips. So I'll keep it at a 3 minute to make sure I'm in the trade. All right, so now I know I'm waiting for my entry here. I'm gonna put this as entry zone. Boom. I know I'm waiting for my entry here. So I'm just gonna play the market. Let's see if price is gonna come to my zone before it goes. Is it gonna change character to the bottom to come to tap me into that trade? All right, here we go. What confirmations do I have? Let's see what the confirmations are. First confirmation that price is coming back to my zone. This high that swept the 5 minute, the trend line, all it did was sweep this, induced it. It did not close a full body. So price confirmed that it was not trying to push further up. And also, we also have this 1 minute zone here. this 1 minute zone here that price is going to also take out. And we have this imbalance in between it, which price did not tap. Price did not tap the imbalance, because if it tapped the imbalance, that would have invalidated this overall move. It didn't tap the imbalance. Let me mark imbalance. Do I have it? Yep. That's what this is the level of detail you want to get to find these trades. You have to be a surgeon. Literally look at this market and think of all of the probabilities why your trade will not work. And I promise you, all you will end up being is finding the exact opportunity where your trade will work. So now we already know this zone right here should fail, but we may get a reaction from it. This one right here, simply because of the 3 bearish candle that it gave. But we're still going to mark it as a fail OB. The reason we know it's supposed to fail is because price had already tapped this demand first. In validation model, it tapped this demand. All right, so price is coming down to us. It's coming down to us. Boom, boom, boom. Let's see if it comes close. Boom, and let's pause right here before it gets to the zone. Now, me looking at this, I have so what only a change of character here. So I'm going to put my thing here. We're gonna put it right underneath the area, and we're gonna take the buy to the next structural high. Actually, I'm gonna take it to liquidity. I'm gonna take it to this imbalance. That's the first stop. First stop is this 1 to 3. This is just basic 1 to 3 action, guys. This is just what I'm showing you, just a basic 1 to 3 action. All right, let's go back to the 3 minute. This was where the original OB was. We don't want to overlook it. This was the original order block. Another thing about it is we had the 3 momentum candles from here. So we can expect price to have a reaction to come up to at least take this structural high. Even when it could simply be a situation where price does not even respect this whole movement yet because it still wants to come down here and take these out before it does it, you still have what's called a probability of price coming in to sweep and mitigate this imbalance before it continues down here. All right, so let's go ahead and put this here. Boom. We're gonna say, I know right here, once you do this, it'll just adjust it for you. Boom. So I already got my positions. How much lot? 10 lot, 970. Let's make it 9 lot, 870. Let's do 9.5. So we're risking about 921. And we factor also in the fact that price may, I mean the fees. We factor in the fees. Now, looking at this, what's going through my mind? Price is coming down very strong at this zone. Why would price respect this zone? Why would this zone fail? These are the things that's going through my mind. These are the thought process you want to have. Why would this zone fail? You don't want to think, why should this zone not fail? First thing you want to think is, why should it fail? Okay, it should fail because there's a trend line liquidity here. It should also fail because there's an unmitigated zone here that it could come down to and tap into. What else? Why else should it fail? There's a consolidation zone here that it can also come down to. Another reason it can fail is we're overall in this overall weekly zone that there is enough liquidity in here so far that price could use. I'm looking for this tool right here to see if there's anything to the left. So we're gonna mark this right here. And let's see what else is to the left. Let's go to 5 minute, 15 minute. These are all the things you want to do. Granted, most of this work here, guys, that seem like it's long work, you've already done before price reached your time. So you don't have to worry. Okay, boom. So when price got here from this high, the only thing it did was wick and mitigate some of this. So all of this right here is still liquidity left. All this right here. Still liquidity left. Okay. That makes me feel a little bit better to know that, okay, there's more reason for price to come back up here and take these guys out. Okay, what else? Other reason why price could fail on a 15 minute, I see that we broke structure here. We broke this. Was the last big structure break that happened on a 15 minute, and we haven't retraced to it yet. And this was the low from where it came from. So I know that there's all this liquidity here. So these are me thinking about the reason why price should fail. I haven't even started breaking down why it should hold yet. So now that I've analyzed all of these reasons why I should fail, I'm back to the market. Now let's ask myself, why should it work? Why should this zone at least is what you want to tell yourself. Why should this zone at least give me this 1 to 3? Okay, because this low led to this high and it broke this 5 minute structure. This high led to this low and it did not break this 5 minute structure. So that alone is letting me know that there's enough liquidity, enough push here, bearish momentum here to push this. Okay, well, why should this 3 minute zone be significant? Is another question I ask myself, right? Why should this 3 minute zone be significant? Because this 3 minute zone was the low that pushed price to this overall high right here that broke this 5 minute structure. And it also gave me this three bearish, the momentum candles as well. So I'm like, these areas should work. So perhaps price is just doing all of this strong push down to make me think that it's gonna push through my zone as a smart money trader so I can FOMO out and get out of the trade or not even take the trade because it looks like it's gonna come violate it. All right, I already know the probabilities. You're not gonna get every trade right. But look how you've narrowed down your opportunity to enter the trade with confluences that aids your possibility of this trade working out. And it's happening in my time frame within 9 and 11. It's an unmitigated OB. Nothing has been tapped here. And it's a zone that led to a high that broke a structure internally and a 5 minute zone. And right above it is an imbalance. And right above it is two OBs that needs to fail, as well as this high, as well as this hour one that we had up here, but it's not showing up because of the way I have the visibility set up. So I'm willing to take that risk to say, hey, if I lose it, it's fine. That's one out of the many that you're gonna get right, but that's just one. Because the only thing that's going against me is the fact that this is a trend line right here. So we're gonna put buy, and we're gonna we're gonna put buy, and we're gonna watch price play, and let's see what happens. I don't know, but let's see. Do we get taken out or do we get taken stayed in? So actually, let me go to the 1 minute. Let's watch it at the 1 minute so we can see as price approach what's happening. It looks like it's trying to form Wyckoff. Looks like, but it hasn't. It's just a look because of the retrace this one candle. Let's see. Did we get tapped in yet? Not yet. Let's see if we get tapped in. Okay. Price is, you see, it's Wyckoff. It's playing around. It's playing around. It didn't tap us in yet. Boom. I think we're tapped in now. Are we not? Oh yeah, we're tapped in. To the bottom right, guys, is where you see where it says unrealized. To the bottom right, that's where you can see that we've been tapped in. Price tapped us in. So let's continue. Let's see. So far, we're tapped in, is going our way, but we don't know. It could easily turn around and take us out. But we're just gonna watch. We're not gonna FOMO. We're just gonna watch because at the end of the day, we broke down our understanding as to why that zone should hold. So the only thing that can happen is price can show us the other way and it turns around and like, okay, well, fine. It was the other way. But look, so far it's going. What happened? We hit TP, didn't we? So
Yeah.
you guys you see how you were able to break down and just surgically bring your understanding down to why this zone should hold from the little bit of nuggets I've told you, from what? The reasons as to why it should fail, as well as the reason why it should hold. And the reason why it should hold, a lot of those little nuggets I told you. A 5 minute low led to a 5 minute high. 5 minute high led to a 5 minute low that did not break the previous low, but instead respected it. Oh, another thing we know is that price tapped the demand before supply. What else come to mind? Jeremy always taught us invalidation model. That's the second confluence as to why it should work. Your third confluence, you're within your time zone, 9 and 11, which aids the understanding that there's enough liquidity to make price turn back around and go the overall direction. Another confluence, we have an internal break of structure, change of character on the 1 minute, a break of structure of a 5 minute. Those are strong confirmations. Now, let's say this green right here, guys, was not a 5 minute. Let's say it was a 1 minute. Would I still take that trade? No, I would not. Because a 1 minute structure is not enough confirmation. You need a 5 minute structure to get broken from a 1 minute movement to confirm that is going to continue. The same way that you need a 5-minute structure to go break a 15-minute structure to confirm that it's going to continue. You with me? Now, although we've already gotten out of that trade, originally I would, in a regular trading day, I would not allow price to get this close and stay in it. I would have already moved my take profit above because I know that these have to fail. I know these have to fail, but the only reason why I would TP this 1 and 3 would have only been where we take partial profit, 50%. You with me, right? 50%. Why did we take 50% there? Because this is an area where there's an imbalance that price can come to and give us a reaction. And let me add another nugget to your understanding as to why this buy would have worked even if you saw it. We went back to 15-minute. What was that candle printed before we even entered the 9 o'clock? Look at this bullish candle we had here at 8:45. This is strong confirmation that market wants to go up before our time. You may say, well, what about here? It started printing these bearish strong momentum candles. Yes, to FOMO the sellers in, the retail traders, FOMO them to jump into the sell, thinking that, oh yeah, this is not a real bearish or bullish momentum because price came from up here and changed character here, push all the way down here. They're thinking this was simply a retracement and that price is coming down here. But what they didn't see or don't understand is what you guys understand, which is price changed character here, broke structure here, broke this structure here, and then created a 5-minute structure. That's just one little nugget. That doesn't mean that, oh, because it created this 5-minute structure, all of a sudden it's not a retracement. No, from right here, we're still in the understanding that this is a retracement. It's when it came here and it did not break this. Now you know you're not in a retracement no more. That was the first sign. Oh, maybe this isn't a retracement. Maybe this is something because it actually tapped into this demand. Now let's see if this demand can break this change of character. That's the next thing you're looking at. Oh, okay, it did break this. It did change this character. Let's see if it could break the 5-minute structure where it came from. It did. Eureka, I'm taking this buy. That's all you need to understand. Now, from all of the breakdown we did from that higher time frame, look at the size of the trade we just took. It's very quick. Quick, in and out. Look at that. We entered the trade at what time? 9:35. What time price got us out of the trade? Right, 9:49. 14 minutes. You just made $1,500 in 14 minutes because you would have taken partial profit. Now let's let the market continue to see if it would have gone to our overall TP, which I would have wanted to take it above the high because this 15-minute zone was not broken. So I know that when it come back up here, these have to fail. That's why we marked them as fail OB. But remember, I expect price to give me a reaction here from this one because this was the one that printed the 3 momentum candles. So let's see what if we do get a reaction because price is coming at it strong. So let's see. We're just going to play it. We're already out the trade though, but we're just going to play it. Let's see if it gives us a reaction. All right, so far we're at the imbalance. We expect the imbalance to give a reaction, of course, but we want to see if that OB also going to give us an imbalance. So price is going to use the imbalance as like a way to get early sellers in. Early sellers jumped in the game right now thinking, oh yeah, it was just to come get this liquidity. It's going to come back down now. Price said, okay, I'm going to let you think that, and it's going to come right back up and take them out. That's what I'm assuming from what I understand of the market. But let's see. It could come back down and take us out. Why? Because there's still this trend line liquidity that was not taken. So understanding that is the reason why we didn't take a super home run. When we got to 1 to 3 right here, we took profit. But let's see. So price just gave us now our first low. There's another low here, actually. It actually gave us this here. Boom. Now let's pause this. Price just did something very interesting to see on a 1 minute. We had this high from the imbalance to this low. This high to this low. Price just changed characters a bit. Okay. From this 5-minute high, it printed this mitigation low, which is what tapped us in. Let's go to the 5-minute. Let's see what we have. So this was the 5-minute zone. Yep. What we mitigated in, it was a 5-minute zone. And this was a 15-minute high because it was this 15-minute low led to this. I mean, this 15. Let me go to it. 15-minute high led us to this 15-minute low. This 15-minute low led us to this 15-minute high, which did not come create a 15-minute low because it was only one, two bearish. So we can actually move this highlighter to up here instead because this is the actual high because it was this low one, two, three, kept going up and didn't create a low here. Actually, pardon me. Yep, it didn't create a low here. So we'll mark that as the high. And we have this here as our 5-minute low. So now what do we have? Can this be the actual retracement? Yes, it can be because now we have the 15-minute high that led to this 15-minute low that led to this 15-minute high. That price is now you can say it can use this imbalance to sell us down to come take this out. Although I'm expecting this to be taken out, this is enough for price to say I can now come down and take this low. But that doesn't mean it's going to do it. But I'm just aiding my understanding of the market that this is enough for price to do that because we already did what? Change character here from this high to this low. We had a change of character. And this high right here, let me see, one, two, yes, this is somewhat of a high, but we're not going to mark it. Let's see. Let's just watch the market play out. Until it comes back in reverse on us, we can't say that's what is going to happen. It's consolidating. It's consolidating, consolidating. At this case, we would have already took 1 to 3 out of the market. There you go. Faked all of the sellers to think that it was an early sell. They jumped in from the imbalance, and what did price do? Come back in, it's going to take them out. And remember, this is still the zone right here we're expecting to get that reaction from because of the 3 momentum candle. So let's see if price is going to give us something there or whatever's happening. Okay, boom, trend line. As you can see, price was built a trend line right here. This is where you mark your consolidation zone, guys. You can see clear as day. Price is just consolidating in this area. And the first thing it did is break low first. It broke under with this wick. And what did that tell you guys about this consolidation? Whichever direction it breaks first is going to come the other way second. Doesn't know when, but expect that is going to come the other way. Okay, let me move it to 1 just so we can kind of get some more speed. All right, so price is coming down and it's probably going to induce this zone because right now we currently have a trend line for this zone. I'm going to pause it again. That trend line which we had marked earlier, it has stretched now. Price has stretched this trend line all the way through here. All this is tapping on it. This trend line continues. So we know that overall, okay, my trend line got discombobulated. There we go. No, it wasn't there. It was here. Yeah. We know that overall, that price is using this trend line. It's using this trend line as a form of liquidity that is building. There we go, right here. It's using this trend line as a form of liquidity that is building. Now, the overall entry that we took from here to this imbalance, and Yeremi always told us this, you don't try to take the trade to the home run. As you see, yes, I have it up here as overall that I would have taken, but that 1 to 3 is this trade. First of all, the imbalance is where I recommend everyone to, like, just like he recommends to us, I recommend you take your trade to the next liquidity zone, whether that's an equal high, whether that's a gap imbalance, whether that's a Asia high or Asia low. You want to exit the trade right in those areas first, especially if it's a 1 to 3. There's no reason for you to try to aim for more. You could try to take your partial, but in this case, if it's just a 1 to 3 to get me to there, I wouldn't even take partial. I would do exactly what we just did here. We just pocketed 1,500. I would have just take that 1,500 and that would have been it for me. It should actually be more than 15, right? Because we risk like almost 1,000. So it should be like 3,000. Let me see. Close position. Oh, maybe I didn't risk as much as I thought. I thought I risked. Oh yeah, I did do nine
You
some.
know, and if you know how you see just at below the buy it says advanced order
Which one?
and it's like a toggle just below the buy. at the on the sidebar, sorry.
On the here,
And the other one.
over here,
Yeah, under the buy, can you see advanced order with the toggle thing?
advanced order.
Yeah, just above a little bit at the top, just below the buy. The
Oh, just below
big
the buy.
green buy.
Yep, right here.
Yeah. If you turn that to the other side, the toggle advanced order, yeah.
Oh, I
And
see.
then you can risk 1% of that
Okay,
account and
percentage.
stuff like that.
Got you, got you,
Yeah.
got. There you go. Oh yeah. So in this case, it would have been 1,050.
It does it, yeah.
Okay, perfect. But in this case, as you can see, guys, what did price do here? It came back to the zone, which we took the trade from. Let's go back to the 3 minutes. It came back to it and it mitigated a little bit more. And it looked like it created an equal low or swept that low. But from there, yeah, it swept it slightly. You can see the needle is right underneath it. It swept a little bit of liquidity there for people who perhaps moved their stop loss to break even, and then pushed to give us this momentum candle. Price could still respect this zone because look, it hasn't even taken mitigated 50% of it. All it did was do a slight inducement of it and pushed up when we tapped in. 50% of it is still not yet tapped. So we still understand that we could still be valid in this trade if I would have kept holding for the longer run. But for you guys, I'm still going to recommend you take the trade to the liquidity zone that's up above, wherever that would have been, which is in this case, this imbalance. But for me, if I was taking that trade just from a couple more experience, I would have said I would have still held it. Even when price would have came back down here, I would have held it a little bit. But that's here or there. It also depends on like how much trades I've had for that day and if I've failed, if I've lost any trade for the week. But if I'm in the plus, I would have held it. If I'm not in the plus, I wouldn't have held it. I would have just took the profit and got up out of there. So right now, at the end of the session, I would have been already, let me see. Yeah, price is gonna fail it. How do I know it's gonna fail it? Because it's mitigated so many times in the zone again, and then we have the trend line still. And remember when we talked earlier, we tried to analyze why should the trade fail? This trend line was one of them. And I also told you before in the beginning, avoid taking trades right in the trend line. In this case here, the trend line is so far apart, and the confluence of that move, what caused us to still take it and be valid, is not advanced, but it's everything that I've explained to you. The 5 minute low leading to a high, and the high that it led to another 5 minute low that didn't break the previous 5 minute low, the original 5 minute low. That's enough confluence because from here it pushed up and created a higher zone that broke and changed character of that previous five. That's enough to let me know that then it's gonna push up to at least create another structure because it has to break it because I already changed character and broke that structure. That's enough for me to take that trade to that imbalance, which we would have pocketed what we did. But let's just finish out the trade, see what price does. Like I said, it's gonna fail the zone. It's probably gonna come down here and give the reaction to this zone, to this area, or furthermore. But that in itself, you see how we would have still got this move of the market, and we still would have made that money for just this move right here. 14 minutes. In just 14 minutes, this move here. Any question on this so far? This not the retracement of it, but the entire section right here of how and why and how we were able to find this trade. Any question, guys?
And it was really good analysis. I think there is a question in the chat.
Okay, let me pull up the chat. There we go. Do you prefer limits or market entry execution? Honestly, I like limits simply because it makes me feel that I was more accurate with my markings versus market execution. Sometime I enter you're more prone to FOMO into the market when you do a market execution versus limit. I've learned that about myself. When I would take trades and I take the trade as a market execution, sometime price will get so close to my zone and I'm like, oh, and it didn't tap me in. For example, right here, it would come so close to my zone and it starts going back. And I see these prints. I'm like, oh man, I missed it. And I would jump into it for price to simply come right back and do this and then tap me in and go. So that has made me understand, let me focus on just limit entries. Because if price is to tap me in within my time frame, guess what? It'll probably come close, then tap, come back, and then tap me in, and then go to direction. Because it's still within my time. So if it's within my time, it'll eventually come back to that zone if it's supposed to. If that's the right move, that's what you got to remember. If your analysis is correct, there's no need for the market execution. Your limit's gonna get tapped if the analysis is correct, just like we did for this 3 minute. We could have marked so many different zones. Remember how much time we could have refined this 3 minute? Remember I said, okay, this 3 minute here, but I went to 2 minute. I said, oh, I could have refined this 2 minute to here. Let me show you. I said I could have refined this 2 minute to here. I wouldn't have got tapped in if I did. Look, price would have missed me. Or I said, how about the 1 minute? I said, oh, I could have refined it to here on the 1 minute. From right here. I would have never got tapped in. But because the 3 minute was the cleanest structure of an order block, I didn't even factor in this little gap imbalance. I could have, because price could have easily got into the imbalance and turned around, but it would have given me a less of an RR. It wouldn't have been a 3.8. It would have been maybe like a 2.5, a 2.6, a 2.8. But I sit right here in this order block because if I'm correct, price will tap me in. And if I'm not correct, it will not. Originally it was right here, not right there. Boom. Let me bring this back down. And I'm going to get to the next question if there was one in the chat. Let me just bring this. This is where we took it to, the imbalance, right at the tip of it. We don't have to go to the top of it, just at the tip. Boom. 3-4. And guess what? I also left a little bit of room at the bottom in case price would have mitigated deeper from the original time it came in and then swept this low, for example, and then decided to go up. Look how much space I gave price. But if I wanted to be real precise, I could have said it right here. Put it right at the tip right here. And that would have given us more than a 1-3. That would have given us a 1-4. You know what I mean? But I don't do that. I like to give price a little bit of breathing room because at the end of the day, it's not about the money. It's about the skill and catching the move. Because the money will come easily. Because as your account balance grows, those entries will be you'll make significance from it. All right. So that's just one example, guys. Nothing about what we did right there is different from any other day that you enter the market. Nothing is different. You would literally in a back testing session after you've done this right here, price, you've already made your money, price continues. You don't even have to continue watching the rest of the day. Just go to this, go to, and then just go to the start of the next New York session. That's it. And you see where you came from. You see that, okay, this 15-minute zone didn't get broken, but it was induced, right? Let me delete this. You see that this 15-minute zone didn't get broken. It was swept. Boom. You take your highlighter tool. You find your 9 o'clock. You find your 9 o'clock and you find your 11:30. This is if you're in the US, of course, you're trying to trade within this time frame. You find your time frame. Just gonna mark as close to 9, 12 to 11:30. Boom. And that's it. And now you do the same thing we did right here. Right here. You coming close to the market, you mark your highs and lows, you find out, okay, we had a change of character here, we had a breakup structure here, we had another one here, and then we have this zones that change of character breakup structure here. Okay, we took this low. You see that price had already taken this right here. Oh, look, another retail supported resistance. Then that's price. I know price is not going to respect this zone because it's not no significant OB, but price is using it as a retail support and resistance. So I'm going to mark that because now I know what price is going to somehow give me a sell from here down. Why am I thinking sell? Well, because this 15-minute zone was not broken. Price didn't close a body. Look what it did. It wicked it. And then it came down and broke here, and broke full. All these were full body closures. These 15-minute zones. Price closed a full body underneath them. Completely broke structure. And then from here, pushed up. It didn't take this, just induced it and came down. That's enough confirmation to let me know price wants to go lower. Another thing, remember this consolidation zone that I told you about when we marked it on a 1 minute? Price went to the upside first, so it has to come the other way. It's time to come the other way. There's another one here. Price went to the upside first, so it has to come the other way too. So these are confirmation that price needs to come here. Now, are we still thinking this zone is going to be respected? No, price still has to come get this, but price could easily come and tap on this demand zone to do that because we have another retail supported resistance zone here that needs to get taken out with this trend line. And this is the last unmitigated OB that broke structure from this low to this high that broke these structures that never been tapped. So the confluence of price selling somewhere here down here is there. Oh, look, bright and early. You can see here before you even get to your time zone, there's a 15-minute zone right here, price left for you. A 15-minute OB. Now you've already got your supply. Before price even got to your zone, you already found your supply. You go to 5-minute. All you got to do now is finish marking out all your zone. I'm not going to go through the whole thing and take the trades because we're going to come to an end. But I just want to let you understand. I just wanted to show you so you can understand. It's not as difficult as you think. It's really just understanding what's happening. Another section, consolidation. What happened here? Price consolidated right before it even got to your time zone, giving you all the signals you need to know. Broke high again. What needs to happen now? It needs to break under. Because when it broke high, it didn't even sweep this to confirm it wants to keep going further. It broke high, changed character here, broke structure here, and then what did it do here? Created equal lows. Equal lows that needs to come sweep. It's just building lots of liquidity. This is all liquidity area that's going to get swept. Remember what I told you earlier? When you see these clean setups of breakup structure, what is price going to do? Use them as liquidity and sweep all of it out. All right. Let me see. Any other question in the chat? No. Any other question, guys? So far from just this 1-minute drill coming down from the higher time frame all the way down to this 1 minute just to find your quick small entry of a trade. Everything follows our entry model, change of character, break of structure, enter the trade. You have to remember that. This is why we entered it. Price change character, broke structure, came up here. Before our time, mitigated this zone, pushed up again, change of character, break of structure. That's why we entered here. Simple. All right. Come on, guys. Are you still here? Y'all fell asleep already?
Yeah, nearly.
I know it's late, so I'm not gonna keep you guys any longer. I just want
No,
to
it's good. Thank you so much.
No, you guys are absolutely welcome. The last thing I want to just show you guys, this is in regards to the broker. I found this broker, Liquid Broker. They're pretty good as a broker. They don't have any spread. Spread, for example, I'm gonna use an example of one of my Trade Locker accounts, my demo. Spread boom. The spread, I'm sure some of you guys know what the spread is, but you see how here where it says spread, can you guys still see my oh, I don't think you can see it. Hold on. Let me go to share. Let me stop sharing and I'm gonna share again. And then we'll be done, guys. Oh, no, it's up here. It's on this screen that I gotta do to stop sharing. Screen. All right, can you guys see my overall screen now? Perfect. Yep, you can. All right, so you see how right here it says spread at the right? Look how BTC spread is. It's huge. The spread is the gap between your entry, where you're trying to enter from, and where the market is actually going to tap you in at. So if, let's say, with Bitcoin being down here, if you were trying to enter the trade, let's say at the bottom of this wick, this is the line that would have to tap the bottom here to get you in. That's how big the spread is. The spread is over 1800s. Or another one, for example, gold spread is 24. Or as what we trade, Euro USD, the spread is 100, obviously, because of the weekend right now, it's showing that big of a spread. But typically the spreads are like that for these. But with Liquid Broker, we have no spread. There's no spread that you guys want. You see where it says typical spread right there to the left, where it says for a typical spread, it says from 0.0 pips. That means when you're entering a trade, you're literally entering the trade from this actual candle, this actual line, which is the market price. You're entering at the market price. versus entering at the end of, for example, in this gold situation, this line here, the spread that has to tap you in, look how far behind it is from the actual market price. So if I'm trying to enter here, the market price can get here and decides to turn around. Guess what? My spread, this big old gap never tapped me in. So you pretty much didn't catch the move. But with liquid broker, you pretty much in a position where you would have zero spreads. So I just got with this broker. They're pretty good. Their interfaces isn't bad. I just created also a demo account recently with them, so I can start doing some back testing as well. They allow you to do similar trades. So I did share the link with you guys. Feel free to register. You can sign up and get a demo account with them. You can get a personal account as well, which is what I'm transferring to. This is my demo account. I did 100,000 demo account as well. So when you go to create that demo account after you sign in, make sure you select the demo ECN, not the VIP, not the no commission, because even when you do a personal, let's say it's not a demo, it's an actual personal. So let me go to the personal, for example. You don't want to choose the VIP because look, there's what's called the minimum deposit. Certain accounts require higher deposits. For example, that one required 100,000 for the VIP. This one only requires you $10. You can start trading as little as $10 with this one. That's perfect because some places require you to do at least 500, 100. This only says $10. And you still have a 1 to 500 leverage, which is the same thing we use here on Trade Locker and a lot of different brokers. So there's a lot of different brokers out there you could use to trade. So far, this is the one that I've found with the lowest spread to where when you enter the market, it is exactly at the price of where the market is. All right. So the link will be in the chat. I'll put it there again for anyone who wants to um, get their account with them as well. You could get a demo, you can get a personal. I'm doing both a demo and a personal. And as you know, I already have a personal also on these right here. So yeah, that's it for today, guys. If there's no other question, I appreciate you guys for attending. Um, Next session, what I'm going to try to teach you is not just how to enter these trades. I want to show you an information that I recently picked up from Alex Garcia, which was how to find trades within the sessions, whether the market opened up outside of your session or inside of the previous session. How do you know which direction is going to go? So that way we can review. So next time we'll continue through more sessions. I won't have to start from the high time frame anymore because you guys already got the gist of that. So we'll jump in from like the 15-minute down so that way we can get through more trades on throughout the week versus just this one that we did because it took us throughout the whole backtesting session. All right. And if you have any questions that come to mind, feel free to DM me in the group chat. I'll try to answer as much questions as possible. And I hope tomorrow I see some of you guys on a call with Yeremi on Sunday. And then during the week, let's catch some pips. All right, guys.
Yeah, I'm back soon.
All right. And if you have any questions for the how to sign up for your trading platforms, let me know as well. I'll assist you with that. All right.
Thank you so much. Do you do it every Saturday?
So far we've done 2 Saturdays in a row. I want to try to make it a situation where we can do it because I know Yeremi does the call for us on Sundays. So why not get an extra practice, right? I practice also by trying to explain to you guys the same information that I got from him. And then I show up on Sunday to see the information again. So it's just going to help you learn a lot faster. Things are just going to start becoming more and more clear because you're seeing
Yeah.
the information repetitive. And there might be little things here and there that I might say that maybe he doesn't really highlight because he doesn't necessarily have to, because Uremi does focus more on a little higher time frame, like the 15 minutes, the 30 minutes, etc. Like he's not gonna sit here and tell you about the three momentum candles that oh you should expect a reaction from there or something. Because he already understands overall that that zone's gonna get violated. So he much rather watch that reaction happen and then it come get induced or violated to then get to his actual POI versus having the understanding that, oh, even though this zone is going to fail, I can still catch a reaction from it type of thing. You know what I mean?
Yeah, absolutely. Thank you so much.
You guys welcome. I hope you guys have a good night. Some of those of you who was very late, I appreciate you spending the time staying on the call. Catch you guys next weekend. We'll talk on the group chat and we'll see if we have a call next Saturday.
Bro, I see you.
All right,
You
guys.
too.
Later, guys. Peace.